There's a new financial trend blowing up right now, and odds are you've scrolled past an ad for it without realizing what it actually was. It's called a prediction market, and in the last year it's gone from a niche corner of the internet to a multi-billion-dollar space that Wall Street itself is now buying into. Let's break down what it is and why it's growing this fast. Here's the basic idea. A prediction market lets you buy and sell contracts on the outcome of a real event. Will a certain team win? Will a certain bill pass? Will a certain number come in higher or lower than expected? If you think yes, you buy a contract that pays out if you're right, and the price of that contract moves in real time as more people trade on it. That price becomes a kind of live, crowdsourced forecast. Thousands of people putting real money behind their opinions all at once. And right now, this space is exploding. As of the middle of this year, the two biggest platforms alone were moving over $40 billion a month combined. To put that in perspective, that's more than triple the average monthly betting volume of every legal sportsbook in America combined just 1 year earlier. This didn't creep up slowly, it happened almost overnight. So who's behind it? The two names driving most of this are Kalshi and Polymarket. Kalshi is a US regulated exchange, and a huge share of its volume comes from sports and current events contracts. Polymarket built its early audience around crypto and political events, and it just made a major move to re-enter the regulated US market after a $2 billion investment from Intercontinental Exchange, the company that literally owns the New York Stock Exchange. When a company like that writes a check that size, it's a signal. This isn't being treated like a fringe website anymore. It's being treated like a legitimate new asset class. And they're not alone. Even Robinhood has started rolling out its own event contract products to compete for the same users. Why is it growing so fast specifically? A few reasons. It's incredibly accessible. You can start trading with just a few dollars from your phone, no brokerage account paperwork required. It taps into things people already care about: sports, elections, pop culture, the news cycle. So it doesn't feel like traditional investing, it feels like having an opinion and backing it. And there's a genuine argument that these markets are more accurate than polls or pundits, because people are putting actual money behind their predictions instead of just talking. Now, quickly, because it matters, this growth hasn't come without real controversy. Several states are in active legal fights with these platforms right now over whether they're regulated exchanges or unlicensed betting sites, and health experts have raised real concerns about gambling-style risk, especially for young adults. That's a deeper conversation, and I'll get into it in a future video. But the headline for today is this: prediction markets went from a niche experiment to a multi-billion-dollar-a-month industry in about a year, and major financial institutions are now betting that this is only the beginning. This video is for educational purposes only and is not financial advice, and it's not an endorsement of any specific platform.